The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 16th magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that, you know what it is. It's to always remember that life happens for us, not to us. That's right, that little 2x4 shift means you and I can find a gift in every set of circumstance that life is going to toss at us. Today, you and I will go looking at the circumstances of the markets. We'll go see what the bulls and the bears, the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon here on the East Coast of the United States. Thanks so much for joining us. I'm absolutely grateful for your presence here, and I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. Internationally, 727-445-1044. We can attach 4 eyes to whatever chart it is that you're looking at. We can look at any time frame. I'll do anything I can to assist you with your trading and investment decision. This is Magical Monday. Of course, it's the Hotel California, sponsored by Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got the Dow trading up 110 points at 17,356. S&P up about 12 points, trading at 2,035. NASDAQ up 13 points at 4940. Russell 2000 is flat. She's trading 1146. The DAX finished up 5 points. The FTSE up 28. Gold's up $3. Silver's up a penny. Light sweet crude is up 66 cents, trading at 41.43 right now. Leading the charge here, looks like to the upside, AutoZone up $12. Northrop Grumman up 6. Lockheed Martin up about $6. To the downside, Clovis Oncology falling apart. Some phase issue, I would guess, I'm imagining, that they've got. So down 71% out there. That's taking the shorts. Priceline, after creating that island top reversal, having some additional momentum to the downside, off $54 today, down 4%. Amazon off $7. Chipotle down 4. Dillard's from the retail side down $7. Baugen down about 4.5. So we've got plenty to go ahead and take a look at. But where should we begin? Let's begin by taking a look at the 2-hour charts here for the equity futures contract. So let's take a look at the NASDAQ. That's in the upper left-hand panel. The upper right-hand panel is the S&P futures contract. Lower left is the Russell 2000. Lower right is the Dow. I'm sorry, is the Dow. Yeah, even I got that right. Now, if we take a look at last night's open. So the gap to the downside was totally to be expected after, the horror over in Paris, right? So you knew that the markets, you could have placed a pretty good bet. I mean, would you have taken the other side of the bet that the market was not going to gap down after a terrorist incident out there? Probably not. But many of you thought that the market was going to move lower after that. Wrong. Dead wrong. So wrong because it doesn't happen like that. That is not how it plays out. And you get the market to really give us those signals across the board. If you take a look at the candle that was formed, now, there is a bit of a nuance here. Because of the gap down, that first candle that was formed, which is across the board, hammer candles in each of these equity futures contracts, you can almost make an argument, and you can, a legitimate argument, that if you go fill in the gap, right, so the close at of the contract Friday evening versus the open, maybe we don't have hammer candles out here. You actually do. You pretty much do here in the Russell 2000, which is struggling a bit today. But you've got a nice hammer candle in the first 2 hours of trading. So between 6 and 8 p.m. last night, you had, and you can come up with whatever theory you want. It doesn't really matter. Now, the cool thing about Japanese candlestick charting, I get emails from folks like you all the time Some asking, hey, I'm just getting into technical analysis. Some where they've been in it for a long time. What do I think is some of the most important elements of what it is that we do? And I can tell you that you must learn the language of the markets. And the language of the markets, Japanese candlestick charting, you must learn that. That is how the market communicates to you and I. And without it, you're just simply leaving such an important element of the way that we interact with the markets out here. And because what those hammer candles were communicating to you and I, they were helping us to identify where there was support. And you need to know that, significant support, because if that line of support breaks, then you know where to go look at, just by looking at swing points, retracements, number of different tools out there where price is likely going to head to. But what this was telling us is maybe counterintuitive to what many people might have thought out there. This was telling us that the markets were being defended by buyers out there. Who they were, it doesn't really matter. By people who probably know what I knew, with which I shared with the clients earlier this morning and a few clients last night as well. And so if we take a look at this 120-minute chart out here, we know we got bulls that have defended those lows of last night, pretty much right at the open within the first 10 minutes. Now what we can see in the case of the NASDAQ, which is struggling a bit here today, you got Chipotle down $50. You got that other pharma company that's down 70%. Of course, it's going to struggle out there. But what price has done, after really just trading sideways here for a period of, 2, 4, 6, 8 hours, we can see that it's now off of the bottom. Off of the bottom where? Off of the bottom of its TAS market profile low. Now, what price should do inside the NASDAQ is make it all the way up to 45.67, 45.54, somewhere in that range. If it clears 45.67, that'll have a different meaning. But that's where it should find support, should find some resistance out here. Now, the first one that's going to really provide you and I an indication as to whether or not that's really going to be stiff resistance for the NASDAQ is probably coming from the ES Mini. Because you see, in the case of the ES Mini, it too should find resistance out here. So we'll know, maybe even during the hour of this show out here. But the top of its box is 2037, and we're at 2034. So we're 3 points away from finding out if that is a stiff area of resistance. In the case of the Dow, which is, you take a look at the movement inside the Dow. I said it was up, 100 points or something like that? No, let's really take a look at let me get my little spreadsheet out here so I can do the math on this. So the low of, so right now, you've got the Dow futures trading at 17,331 minus, I'm not, what the heck? Yeah, 17,331 minus last night's low, 17,052. That's going to give us a figure. Oh, that's wonderful. That's going to give us a figure of, 279 points. So we've seen a 279-point move since last night's open. That's a pretty powerful move out there. And what the Dow futures are going to do, you're going to see more than that. And by more than that, you're going to see move up to 17,363. So you've got another 60 points. So that's a 340-point move that is inside the Dow out here. So we'll see. We'll want to pay attention to those two levels because it's going to be the Dow and it's going to be the S&P futures contract that is going to give us our first signal. Now, if price is able to clear that, if we just switch over to the 5-hour energy chart out here, the 5-hour chart also gave you and I some really important clues last night at 11 o'clock. Well, actually, the confirmation came at 4 o'clock this morning. So at 4 o'clock this morning, they also suggested that there could be, quite frankly, a significant bottom that just formed last night inside of these equity futures contract, inside of the market. Now, in the case of the 5-hour chart, we can see that the NQ is inside its bullish style market profile. And as long as price stays above the level 45.05, it actually says that price wants to run up to about the 45.88 level. The ES Mini, it wants to trade up to about the 2044 level. So we know it's got to get through 2037, then 2044. Again, it's probably going to be the ES Mini that's going to go ahead and give us the biggest signal out here. So that's what's going on in the market. What's taking place today, forget about, quite frankly, there were so many signals last week on Thursday and Friday, so many signals that this market wanted to find some type of bottom out here that even the carnage and the horror and everything that took place over in Paris wasn't, quite frankly, most people would have thought, okay, that's it. I'm packing it in. Maybe you heard that and you're like, this is going to be great. The market's going to crash. That's not the way that the market responds. It doesn't. It hasn't. You got to go, it just simply doesn't. In any event out here, so we had all those signals. So now what does all that mean? And, let's try to put that together. Now, let's try to put that together by taking a look at, let's look at the ETFs. Now, we'll kind of dance around here, but let's take a look at the Qs out here. And as we take a look at the Qs, let's see what they actually did last week. Now, this is the daily chart. So inside the Qs, both you and I, we've both taught each other that these gaps are our friends. They are not our foe. Gaps are our friends, especially on the way up. Why? Because they are breakout areas. In this case here, we had a wide-ranging bar, wider-ranging bar than anything on the way down, including Friday's session out here. The volume to the upside, 53 million shares. The volume to the downside on Friday was 52 million shares. So you're coming back into a breakout area with virtually the same volume, slightly lower, pretty much irrelevant, insignificant, basically coming back to a breakout area on light volume. As long as 109.70-ish holds as support. And we'll say volume-wise today, 17 million shares so far to the upside. That equates mathematically, straight line basis, of about 30 million shares. Now, we can make the case, and that case is out there. There's no question about it. We can make the case that we're bouncing with light volume, and that could be setting up an A to B equals CD to the downside. Well, we'll pay attention to those futures contracts. We'll also pay attention to the price levels of probably about 113.18, 114.19. What I can tell you is if price gets above 114.19, more likely than not, what you're forming or what the market is forming is an A to B equals CD to the upside. At least a revisit of the highs out there. So we'll take things one step at a time. If we just switch over and take a look at the weekly chart out here, I think we ought to do that, see what happened last week and measure volume. The breakout week that began on October 26th, that had volume of 151 million shares to the 173 million shares to the upside, and you pulled back with 175. So again, we can take a look at the weekly, the daily, the volume, schmolium. It's not really providing you and I, it's not providing us with any kind of bearish signal out here. All we know is that price came back to a level where things broke out. Now, on Friday afternoon, I did a segment with Tom, and it didn't get to complete everything through that segment. So we'll go ahead and take a look at some of those issues, and we'll stay with the Qs, but we'll switch over and take a look at the NDX 100. Because quite frankly, I believe that the signal inside of the Qs, and you're absolutely right out here, is that on Friday it did create that island top formation out here. And that says if we take a look at price points, if price can close above 111.96, that pattern goes away. So 111.96 probably a key number to be paying attention to inside of the QQQ ETF. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow up about 0.9%. The same thing with the S&P. The composite's up 0.5%. Russell 2000 up about a little over 0.1% out here. New York Stock Exchange up 0.8%. So let's start off by doing this. First, I've got the chart here for the annual chart, the yearly chart here for the S&P 500. And right now, it's trading at about 2,040. The open for the calendar year was 2,058. So we're looking at what, 17, 18 point spread between the open in 2015 and where we're trading right now. And today the S&P is up The S&P is up 17 points. So in essence, 1 day of trading. So we've basically got a flat line out here. Now, if you and I take a look at this annual chart, the closest calendar year that we can take a look at that 2015 is correlating to happens to be 2011. 2011, we basically had a doji, a flat market. The open was 1370, and the close was 1258. 1258. So you had a 2-point move in the entire year. So I would say that that's interesting. So 2011 correlates to 2015. That's what really leads me to then this chart. So if that correlation is out there, it's always nice to take a look at market correlation, see if there's any patterns, right? We're pattern recognition specialists, you and I out here. And if we go take a look at the calendar year of 2011, what we're going to find is that correlates to this little brown line that's on my screen out here. So that starts January 2nd. In essence, it may not have been January 2nd in 2011, but I'm equating this to the calendar year, the trading year of 2015. But just the first trading day of 2011 starts on the first trading day of 2015. That way, it gives us the opportunity to take a look at dates. Now, what's interesting about 2011 as well is 2011 had a big drop into the August timeframe, the end of August. In our case here, it was August. It was the beginning of August. So August 7th. In essence, was its big move to the downside. It had another move. It really consolidated here between the August 7th time frame and the early part of October, the end of September out here. And if we take a look at the current market conditions we're in, our market got started to the downside August 24th, consolidated up until September 29th, October 1st. So that's very similar to the patterns that we've got out here. In 2011, there was a relatively good size drop. This was right around the November 10th-ish type time frame, down into November 24th. So that was right into the Thanksgiving trading session out here. So, and that would be the equation, that would be equate to 2015. So there's the possibility, even with the nice bounce that we've got going today, if 2015 is going to go ahead and continue to follow along the analog of 2011, says maybe we do have some more downside action. But after that downside action, if it hasn't already taken place, that says we ought to anticipate a low sometime next week, right around Thanksgiving, right around November the 24th. And then what happens? For whatever reason, the market takes off to the upside out here. That's what took place in 2011, and this is the closest correlation that the market is really tracing its steps to. Well, that would be one way to correlate it. What you and I also can do is we can go take a look at the 82-year average. So over the course of the last 82 years on average, what you and I know is there are certain times of the year, certain date specific, which the market has been tracking. In other words, in the case of the Dow, although it's not pictured here, we can go to the day. May, it was off by a day. May 19th, I believe, was our high in the Dow. May 20th would have been the 82-year correlation to have made the so-called unfavorable seasonal cycle high. So that's kind of interesting. Remember, our market made a low, I believe, in the early part of February. In the case of the 82-year historical correlation, it was off by like 3 trading sessions. So if we take a look at that 82-year average here, November 5th was anticipated to be a high. Well, let's just go take a look at the Dow. Let me put the Dow up here, INDU. Let's put this to a daily chart out here. And as we take a look at the high that came in, November 3rd and November 4th were basically the highs inside of the market, inside of the Dow. And then it's gone ahead and moved lower, obviously, with the exception of today's bounce. So isn't that interesting? Well, if that's really the case out there, then it says that Friday the 13th, should have been basically the final bottom for the Santa Claus rally. That began September 29th. Now, if that's not the case, there's a little bit of a potential maybe move higher, then a pullback, and then it's off to the races. That takes us into that November 20th to 24th range out there. And then the market moves higher. So I say, something to think about. Let's go take a look at the NDX when we get back, because that's where our clue is going to come from. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow, she's up 141 right now. S&P is up 16. Of course, we've seen about a 35, 6, 7, 8-point move off of the lows from last night inside of the S&P futures. So we've got a fairly large move that is underway. Now, when we take a look at the NDX 100 out here, so we've looked at the S&P a little. We've taken a look at a little bit of everything, but I really believe it's the NDX 100, which has been the leader on the way up off that September 29th level. So I think it's really important to check in on the leadership out here. Here's what you and I know about the NDX 100. Number one, let me get my crosshair going out here. Number one, coming off that August 24th low, we know that what the NDX 100 did was it completed an A to B equals CD, moved the upside of a lightning bolt pattern. You say, what is that? Well, we have a measuring tool to help us identify where price is headed to. That measuring tool allows you and I to take a look at the most relevant swing points, where we see the most significant changes in direction in the market. Well, clearly the market was moving lower into August 24th. We take the low of that session. Market moved on up into September 17th. We take the top of that section. The market goes ahead, normal retracement, natural retracement, down to the low on September 29th. The one-to-one price projection was 47.1650. 55. The actual high that came in was 47.37.11. Remember, you and I, we don't use these for exactness. We use these for guidelines. On the way up, what it was doing was it was moving higher, less relative strength. That's that little diagonal line that goes across my screen. So you complete an A to B equals CD to the upside. You go ahead and you make a price relative strength divergent pattern. And on top of that, you go ahead and make 7 waves to the upside, letter G, that is labeled off of that August 24th low. So you've got 3 topping patterns out here. The market pulls back, and the market pulls back to the 50-day exponential moving average. It pulls right back to that area where it broke out, that big gap up on October the 23rd out here. Now, that's what the NDX has done. It's only got 2 legs to the downside, but may have actually found support at that 50-day exponential moving average line. If we take and we investigate a little bit further out here, which we're going to do. So that's what it did on a daily basis. If we take a look at what the NDX 100 did here recently on the, I've got a weekly chart up on my screen out here. What we can see inside the NDX 100, this 46.97 level, where price found resistance, was its weekly horizontal trading range boundary line. What does that mean? That means that you and I take a look at a stock chart. This one here goes back to 1994. It's in September of 94. I'm just simply looking for, I've got a mathematical program that goes through and it identifies the largest number of opens or closes, and then it creates, once it finds the first level, then we find the next level, and then once we have those first couple levels together, all we have to do is just keep adding those chunks, those floors, like you were building a house. The market builds floors out here, just like building a house. And so price ran into resistance at what we were looking at on a daily. That makes sense. On the weekly, it found resistance out here. And at the same time, what it did, as you and I have talked about, it created this island top reversal. So inside the NDX 100, the key level to be watching is going to be the low of November 12th. If price closes inside of that, above that, 45.88, that says that island reversal no longer exists. Now, if the highs get taken out, there is nothing more bullish than a failed bearish pattern. What's in play, though, right now is certainly the bearish pattern. But the offsetting bullish pattern, we talked about the 50-day exponential moving average. Well, the bullish pattern could be, it's not formed yet, could be the 50-day simple moving average. When that crosses, or if that crosses the 200-day simple moving average, that's the red and green line on my chart. Right now, the 50-day simple is at 44.32. The 200-day is at 44.33. So we're basically within a buck or two of a potential crossover. If we get a crossover today, tomorrow, the next day, and that crossover holds, what I can tell you with certainty, how much certainty? I don't know, 5,000%. How's that work for you? If we get that bullish crossover, the market will go back to those highs. The market will take out those highs. We'll see an A to B equals CD to the upside. We'll see a nice Santa Claus rally. Not because that's because I wanted to or anything, but because that's what it's always done in the past out here. So there's the possibility that it doesn't cross and we see some kind of deflection. Then the market pulls back. Where does it pull back to? It probably pulls back into this 4260-ish type area. That happens to be the long-term channel line that, it is trading with inside right now. 4411, that would make sense. That's a daily horizontal trading range level, that 4411 area. But right now, what you and I want to be watching with certainty out here is we want to be watching that 50-day and 200-day simple moving average. You can see that the exponential, if I change this here, I'll change this chart just simply so you can see huge difference between an exponential moving average and a simple. Here's the simple, the green line. Watch when I change it to the exponential, and you're going to see prices run right down into that level, maybe to access support or not. I am not a big moving average guy necessarily. They're momentum indicators, great momentum indicators out there. There is no moving average crossover to the upside and the downside that will net you profits. They're too much of a lagging indicator. If you take a look at the MACD, it uses the 12 and 26. I have found on a 1-minute chart where I can actually find profitable results, but I've tested virtually every moving average crossover that says when it crosses, when the fast crosses above the short, go long, and when it crosses below the when the fast crosses below the long, go short out there. And in fact, tested them for going back to the 1990s out there, 20 years worth of 25 years worth of data. I've never found one that gives you any kind of winning profitability out there. And so in any event, but they still are, but there is some price behavior. And I will tell you that golden cross, that's what the golden cross is when the 50-day simple moves above the 200, that does have some bullish outcomes. Doesn't mean that price doesn't pull back and test it, but prices always moved higher out here. So it's all about the NDX 100 as far as I'm concerned. We can throw everything the heck out the door. I don't want to. I mean, we need to pay attention to that stuff out here. But if we do get that crossover, I can tell you whether you want to believe it or not, doesn't really matter. The typical pattern is that price moves to higher ground out here. So we'll keep an eye on that. If we go take a look at what's going on inside the summation index, the price oscillators out here for the NASDAQ composite. Let's look at that. The NASDAQ composite, we also have that island reversal. So just like the NDX 100. So the price to be watching there is going to be 5,004. We already pointed out that price is struggling a bit today because of some big movers to the downside. Price came back to the breakout area in the 49.20 level. Price had gotten down to an oversold price oscillator reading. So we're seeing a bit of a bounce. If, in fact, price can get back above the zero line, I doubt that is going to happen today. That puts the possession of the ball back in the hands of the bulls. I would imagine that if the NASDAQ price oscillator gets above zero, we're going to end up seeing that crossover on the daily chart out there. And so then you'd have another bullish piece of information out here. If we take, I've got a request to take a look at a couple things. So that's the overall sense of the market. We should have anticipated that the market was going to go ahead and bounce after the open last night because it's like it always does when we have these terrorist issues that are out there. So that's the good case. That's on the side of the bullish case. And we're seeing the follow through today. Do I expect it to hold? Yeah, I expect it to hold. And I expect the market to actually move higher tomorrow. If we take a look at the VIX index out here, let's go see where we're trading right now. And the VIX index is pulled back slightly, actually more than slightly right now. Let's see, percentage-wise, we're down about 7%. So it's back $1.38. It's trading out at 1870. But the key number for us to be watching is, can the VIX get down below 1776? I like that 1776. What happens if it closes below 1776? I tell you what happens is we probably get that 50, not probably. If it gets below that, it tells you the bulls are back in control. We will get that golden cross inside the NDX 100. We'll see those gaps down, those island reversals go away, and we'll see the 82-year correlation kick in. We'll see the 2011 correlation kick in. And it says everyone have a happy holiday because the market's going to move higher out there. Or don't be on the other side of that trade out there because the signals will have gone, vanished, vamoose out there. So that should hopefully give you a good overall picture of the market out here. And if we see things change 2 minutes from now or tomorrow, then our entire outlook will change as well. We'll go back and we'll take a look at the charts out there. But you and I, we want to be the Sherlock Holmes of what's going on inside the markets and anticipate this stuff as much as possible. Now, if we take a look at, I have a request to take a look at a couple of different stock symbols. It looks like a couple of REITs. SNH is one of them. Let's go take a look at SNH. Let's look at it on a daily basis out here. If we take a look and try to figure out what it's doing, let's go put our market profiles on our screen. Let's see if we can do that. Put the daily and the weekly. Eventually, these things will populate. So nothing bullish there for us to hang our hat on. Inside of SNH. No bullish reversal signal as of yet, as this thing has moved lower. This listener is looking for a target price for buying for the long term. So long term means we ought to go take a look at long term. We ought to say the heck with the daily chart. What's going on with the monthly chart for senior housing properties out here? And does not necessarily look good. On the monthly chart, you're trading inside this swing point from 2008. And as long as you're inside that, it says price can get down to the low of that candle session, 1040. You are at 1396. So that says be patient out here. If we look at a weekly chart, is this thing testing anything on a weekly basis out here? or what's going on volume-wise. Is there any patterns that have set up? None of the above, really. On a weekly basis, even on the weekly basis, you go back to the swing point from December 1st, week that began December 1st, again, that high 1375. No, that couldn't be the high. The high was, let me go ahead and scan out here a little bit further. So that swing point high, 1375. So price should at least get down to 1375. That's it. Yeah, that swing point. So 1375 is a level to be watching. If on a weekly basis, SNH can get down there, reject that price point, do it with less than 22 million shares, and then you get some kind of sign of strength, and that tells you that you would have a bottom in on senior housing properties, I believe. Let's take a look at the other one. STWD is the ticker symbol out here. STWD. That's trading out at $19.95 as we speak right now. What is this? This actually looks much better as a stock chart than the first one that we looked at. I say better because, well, at least this is not going back to 2008. Let me turn off those profiles for the time being out here. What this is trading back into on a weekly basis is the swing point out here. So it's tested. Right now we're trading into it, looks like this week. And the top of which is the price point of $19.95. You're trading right now at $19.95. How coincidental is that? I don't believe in coincidences. Volume on the weekly basis from the week that began June 24th, 2013, was 43 million shares. If this week you can see this close above 1995, do it on less than 43 million shares, then it will suggest that you may be forming a bottom here. The last time we tested 1995 was on October 26th, and that was 18 million shares. So then ideally, what you really want to see is forget the volume of 43 million shares. You want to see this week's test on less than 18.7 million shares. In fact, we tested it last week with 9 million shares. There it is. So you keep testing this on lighter volume. You want to see this week it close above 1995, and then you want to come back to the daily chart, and you want to see some kind of sign of strength out here. A sign of strength would be opposite of what you actually saw, which was October 27th, which is a sign of weakness. I say weakness because price moved down into that 1995 level with accelerating volume. You want to see just the opposite now. The volume there was about 8.9 million shares. What does that say? That says to me you want to see a move higher with more than 8.9 million shares out there. And then you can either hop on board because it's a long-term trade or investment for you. You can hop on right then and there. Don't worry about price, whether it comes back on lighter volume. Just simply fire away if you see that sign of strength out there, and just use a wide stop. Just adjust your position size out there. So that is ticker symbol. That's Starwood Property, I believe, STWD, and what it is doing out there. Okay, those are all of the requests that I see that we've got in. Let's go take a spin around the markets and take a look at Goldilocks, see what gold is doing. So you got the U.S. dollar index. That's up 35 cents. It's trading out at 99.45. If we take a look at gold, we had gold jumping at the open last night. I think up 10, 11 bucks. Actually got up to a high of 10.97. What gold is doing out here, now we didn't get the CFTC COT data to understand what the large commercial traders are doing. We'll know more after 3:30 today when those numbers are released out here. Gold is doing what it's supposed to do, which is basically about as bearish as you can get. It's if this just continues to trade sideways out here to work off the oversold condition, which it got into, and assuming that the large commercial traders are not in any kind of hurry to totally get out of their higher net short interest, this says that gold has another leg lower. That probably means the euro weakens and the U.S. dollar index continues to move higher. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 153 right now. S&P's up 17. Composite up 25. Russell's up a point. When we began the show, we began by taking a look at, well, first we got the signals last night, true signals from both the 2-hour and the 5-hour charts inside the equity futures contract. So they gave you the best signals. They gave you those nice hammer candles in unison out there. The 5-hour charts gave us a nice seventh wave move to the downside. They confirmed that. Biggest hammer candle that was present was inside the Russell 2000. We talked about 2073. We said the ES Mini is going to be the first of the equity futures contracts to give a signal as to whether or not there's even more upside potential out here. We said 2037 was the key number. We're at 2037.50 as we speak right now. We said that Dow futures, they would be number 2 to provide us with the information. Dow futures, we're going to go ahead and trade up to a 17,366, or 363. Right now we're trading at 17,361. So we've gotten up to that level. If we see price take these areas out with conviction, what you can anticipate, so this helps both bulls and bears out here. If I was able to tell you where price was going to go to when we got on the show out here, it would make sense that if we clear these areas, then we just go to the same set of indicators, just up another level, right? We just go up to a larger time frame. In this case here, we'll go from 120 minutes to 300 minutes out here. And says the ES Mini headed up to a price level of the 2044 area. Another 7-8 points out there. Should be no sweat, no big deal. And then you're going to want to watch the Dow at the 17,405. You take those levels out, and you got a heck of a market. You got probably a heck of a move that is underway out there. So that's what's going on in the overall markets. Watch that VIX index as well. I gave you the number on that to be paying attention to. I believe it was 17 and change, 1777, somewhere right around there. You see a close below that, and the message would be do not be short this market out here. As far as anything else that is moving currency-wise, we go take a look at the currency out here. If I look at the euro, Japanese yen, at this stage here, it's completed a 1-to-1 A to B equals CD to the downside. Just depends on how it finishes today. Could actually be a hammer candle if it finishes to the upside out here. So we'll check back in on that tomorrow. The euro versus the U.S. dollar index, we've talked about how that is below every kind of level of old support. Now is new resistance, the $1.08 area, and pretty darn good chance that you're going to see the euro at least test the swing point from back in April of 2015. That's somewhere around 106 to maybe 105. Could even take that out and get all the way down to the 104.59 level. So that says strength in the U.S. dollar. That says, the gold, the whole gold scenario. Don't be looking there because you're going to end up getting clobbered again out here. Just simply, if nothing more than the mere fact of the correlation inside of the U.S. dollar index out there. If we take a look at the Japanese yen, let's go see what it is doing. Looks like the Japanese yen has woken back up. Probably wants to take out this high from November 9th. If it does that, that high is 123.60. Says you're headed up into the 125.28 level. That says the U.S. dollar index will also get stronger as this currency pair gets weaker out there. So light sweet crude looks like it's woken up. Black gold, Texas tea. But, if it can close back above 41.95, that offers some promise to higher price. Otherwise, right now, it's just simply testing old support, which in fact could now be new resistance. Folks, have a magnificent, marvelous, magical Monday. Stay tuned. Our man David White is up next, and I look forward to seeing you on Terrific Tuesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.